Welcome to the CIO Update. In my weekly, we've entitled it Beggars Belief, which is a very English way of saying we really can't believe what we're seeing. Central bankers continue to stumble along, trying to give a sense that they're very confident about achieving their targets, but those targets have seemed unachievable. When we look at the Bank of Japan statement last week, they talked about manipulating the yield curve. They talked about trying to hit an inflation target above the current one, even though they've got the inflation up to nowhere near the current targets. This means that confidence in central banks to achieve the kind of consistent growth and inflation just doesn't seem to be there. In the Federal Reserve, we saw them yet again hesitate to increase interest rates. And meanwhile, in terms of their long-term forecasts, they now believe that interest rates will peak at a much lower level, and that growth will stumble along at a number well below 2%. So this is not giving us great confidence in how we should invest our capital, and certainly we wouldn't encourage people to take significant weightings and position much of their wealth in asset classes such as equities. So what do we do in this kind of environment? Well, there is some good news out there. Whilst developed countries are stumbling, we're seeing better news from emerging markets. And we continue to be positive about emerging market equities, where for the first time in some considerable time, we've now had a consistent upgrade to corporate profit forecast now for the last 2 to 3 months. Even the bond market, we're getting better news. In South Africa, there's maybe even scope in the coming months for a cut in interest rates after all the poor political news and increase in interest rates as a reflection of the inflation pressures that country's faced in recent years. So better news in the emerging markets and an asset class that we're still very focused on. But you need to go back to still the safety and security of quality bonds and of gold. Gold seems to be trapped a little bit at the moment in a trading range between $1,300 and $1,350. We'd like to buy at the bottom end of that range, but never lose sight that this metal could easily be hitting the 2,000 and 3,000 level in the coming years if this financial crisis continues, and if we continue to see that the central banks are not creating the environment which gives us a long-term hope of consistent growth and good inflation. So sorry to end on a negative note, but again, there are parts of the world that are doing well, but sadly, central banks are still failing to deliver.